Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and my passion, which is advanced mechanical trading algorithms. We have 21 SPY and ES mean reversion systems, which have about 90% winning trades. By the way, they have handled this correction pullback in the market excellently. They all gave very nice trades the previous week. Almost had one trigger today. And of course our KISS trend systems, which by the way, most are in cash, as you know, because these are trend following. They have that stop protection. They allow you to ride bull market uptrends, but have that nice protection so you don't have to go through these corrections or bear markets. And you can see most of these things are flat in cash. Most of the indexes went to cash 2 or 3 weeks ago. The S&P and Qs went to cash on July 18th and 19th. So that was excellent entries. And you can see there's a few things open here, like AT&T system has about a 13% gain. TMF, TLT, and Meta. Looking at the ETF side of the KISS systems, there is still quite a few open trades here. Some nice profits on some of these. But anyway, again, if you're just a YouTube follower, if you want to get access to these systems, just sign up for our membership, click the enroll button. And our membership, you have different levels here. They're all the same. Ignore the professional unless you're actually a professional and you want, to be able to call me and stuff like that. But otherwise, quarterly, monthly, 6-month, they're all the same. You get a big break in price by paying up front. That's why the 6-month is the best option, why about 99% of our subscribers choose that. Gives you roughly a 50% discount over the monthly. So that's the best one. Plus, if you want to follow systems, you really need 6 months to see a bunch of trades. A month just isn't enough time. Okay, let's go ahead and get back to this newsletter market at hand. This is our backend recorder for our website subscription service. I'm going to get that recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, August 7th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections, same organization as I usually keep. Have our opening statement. I'm also going to talk about some of the systems, then we'll move into the general market indexes, various indicators like the VIX, a few sectors, US dollar, yen, Bitcoin, commodities, precious metals, gold. And I'm not adding any trade ideas in this environment. Remember what I told you guys on the weekend. Hold on to your butts. It's going to be a wild ride. And that has been, what's happened this week. We've had this extreme market volatility. The VIX hit 66 on Monday. Hadn't been there in years. We've had multiple 100-point range days all week and since late last week. For example, the S&P hit a high of 5330 today, closed at about 5200. That's a 130-point range, guys. So par for the course in this crazy volatility. Big caps, we were looking for that rally coming into, from the weekend coming into Monday, and we did get an oversold rally, but, so far that may have just been that wave forward that I was talking about. And we're going down to test the lows or make new lows in a wave 5. The big cap tech stops, they all bounced early in the week, but they all have stopped at their 9 EMAs. That's always your first stopping point, okay, in a strong trend. That said, it is still possible that the bulls could try to recover it, but they got to really do it right way tomorrow on Thursday, guys. The S&P has retraced 61.8% of the move up off the Friday's close, and these little diagonal wedge patterns usually have deep retracements. So, it's possible we could recover right from here, but again, the market kind of just needs to go tomorrow if it's going to do so. Otherwise, I'd favor a test of the lows or maybe a new low, which I would honestly welcome because I think that would allow some pretty good entries for some swing trades, on the long side, some of the indexes, some of the big cap stocks, stuff like that. But anyway, let's go ahead and move on. Let's talk about some of these systems. So first image below, item number 2. This chart is of MES futures. This is the CCI divergence, mean reversion system. So I sent out a trade notification just after the close stating that the system was likely to go long today. It was showing a long, and then when once ES futures reopened, that long actually went away. Very annoying. but it's showing a possible entry for tomorrow now. Okay. So what happens there, I call those phantom trades where they're showing up and they go away. What happens is ES closes at 5 p.m. Eastern. It's closed for an hour, then it reopens at 6 p.m. What happens sometimes is the exchange adjusts some of the prior data, and that can change, where these indicator positions are just slightly enough to cause something not to show up. It's annoying, but it is what it is. That's why I stated I wanted to wait for ES futures to reopen. I'm glad I did because it doesn't show the trade. That said, may trigger tomorrow, and then this is actually one of my favorite systems. It's based on the CCI indicator. It looks for a divergence in the CCI indicator, and you could see. So we'll see. Next, image number 3. Here's the statistics for the CCI divergence mean reversion system. And again, I have this system for both ES futures and SPY. For the SPY, it didn't trigger, and obviously didn't trigger for ES right now, but it could tomorrow. But here's the stats. Profit factor of 66.5. That's extremely good, right? Means for every dollar you lose, make about 66 bucks. 95.7% winning trades. Again, tends to be a short, system doesn't stay very long. You can see averages about 4 to 4.5 days. So, doesn't trade a lot, doesn't hold a lot, but that's fine. It just looks for an opportunity to get in and get out. I'll let you know if this triggers tomorrow. Next, image number 4. Here's the QQQs from the KISS system tables right from the website. Again, most of these indexes exited weeks ago. The Qs exited back on July 18th. Again, it's never going to catch the top, but don't you feel good if you took that exit now? KISS system's doing their job. Remember, their job is to keep you long during uptrends with a stop protection so that you don't have to go through these big corrections like this or bear markets. And so, if you exited there and you felt like buying back now, you could, and you'd be ahead of all the, the pawns who've held all the way down. So KISS systems are doing their job well. Chart number 5, here's the S&P version. Same thing. This one exited on July 19th. Again, I originally designed these KISS systems for 401k management. So folks who have a 401k IRA, they might self-manage it. Typically in a 401k IRA, you have, instead of a bunch of stocks, you typically have index funds like the S&P, tech, NASDAQ, some bonds, stuff like that. And it's great for that. It's also great for individual stocks as well. But good job by the KISS systems. Next, moving back to the general market. So image number 6 shows the index sector table, what transpired today and this week. Okay, so first off, you can see today's decline. S&P down about 0.8%, NASDAQ about 1%, Russell about 1.2%. Guys, here's the thing. The market gapped up this morning, and it topped out about the first 30 minutes of the day. So that was a gap to sell into. It opened right up at resistance, right? Supply zone. Those are very powerful areas. And hopefully, if any of you are long, some of the indexes you took profits there, or maybe even shorted. And the market basically sold off the rest of the day, and you can see the results. And for the week, nice declines as well. Russell down 3.35%, S&P down 2.75%, NASDAQ down about 3.5%. As far as the major market sectors, most were down obviously today. Just a few minor greens here. You can see utilities, consumer staples bouncing. Those tend to be defensive sectors. Bloody red for the week. Every single sector, all 21, are firmly down. Currencies, US dollar bounced back a little bit today, down up 0.25% for the week. For today, it's pretty flat for the week. Bitcoin remains weak, as you know. Definitely not a safe haven. So you've definitely seen that. Tends to be a leveraged play on the NASDAQ, quite honestly. And as far as commodities, now we did have an update on commodities today. So DBC, the index, was up 0.9%, still down for the week. Crude oil was up slightly, natural gas up 3.5%. I pointed out that falling wedge on natural gas on Monday and yesterday, and that's playing out. Copper up a little bit, uranium, agriculture, wheat, coffee. Coffee had a big bounce. Don't tell Starbucks. Precious metals, gold down 0.5%, silver flat, but GDX down 2.6%. So it is leading down, guys. Not a good thing. As far as the bond market, we had a little bounce back today in the, well, we got a bounce back today in the 10-year, 30-year Treasury yields. They're up pretty nicely for the week. And see anything else there? Yield curve. Yield curve is back to 0.98. So remember, when it goes back over 1, it's no longer inverted. And while you may think of that as a good thing, typically after being inverted so long, that's when you get your recessions coming. Again, I already talked about that ad nauseum. So item number 7 shows the economic news calendar. Thursday, remember we have the initial jobless claims in the morning at 8:30 Eastern AM and natural gas inventories, if you're holding some of those natural gas ETFs. Next, jumping into the chart. So chart number 8, here's the Nikkei. As you know, this really accelerated things last week. And on Monday, you had basically a huge sell-off on Friday. Again, it had already been downtrending. And then Friday was just a absolute disaster. Kind of looks like the 1987 Dow crash, the way that decline there, down 20% in a couple days. Anyway, it's bounced back the last couple days, but still below its 9 EMA. It got so far extreme down here. Next, looking at a few of these individual big cap tech stocks, a lot of you follow. Here's NVIDIA. You know, all these have had nice corrections from the highs. Meta is the only one really holding up. So again, most of these have bounced from the Monday lows, which we expected. But most of these have stalled so far right at their declining 9 EMAs. And a strong downtrend, that's your first resistance. So we pulled. You can see NVIDIA, again, taking this little demand zone down here was probably a good trade on Monday morning if you could have stomached that without the emotion of the gap and all the news. But, you know, would have been good to take some profits right at the 9 EMA. It's still in a downtrend. Okay. We also have that 200-day moving average, and if we were to go to make another low, maybe that will be tested. All right. But I am watching it because, you know, and those of you who've maybe wanted to buy a position in NVIDIA, it is an area to start watching. One thing that could be a valid long trigger would be a break of this RSI 14 trend line, which hasn't occurred, obviously. Chart number 10 here is Microsoft. Again, bounced nicely from Monday's lows outside the Bollinger Bands. But where is it stalling recently today? Right around that 9 EMA. You can see that's been stiff resistance in this very strong pullback downtrend. Chart number 11, here's Amazon. Same deal. Now this, you know, came right into that demand zone on Monday. Bounced up, but it's still quite a ways below its 9 EMA and 200-day moving average. Chart number 12, here's AMD. Again, it did bounce off that little demand zone on Monday, but you could see, once again, stalling at that 9 EMA. It's in a very steep downtrend channel. Chart number 13, here's Apple. You know, as you know, Warren Buffett, Berkshire selling about 50% of their Apple stake. That got hit on Monday. Had a little head and shoulder pattern, which basically played out to this demand zone. You can see it still managed to close positive today, but you know, you can see that today's highs stalled right at that 50-day moving average, just below the 9 EMA. All right, so that does it for the major, the big cap tech stocks. Moving on to the indexes, here's the Dow Jones. Again, nice sell-off the last several weeks in the Dow, little three-wave sell-off so far. Back into a little demand zone right now. We bounced off of it, but you can see stalled at the 50-day moving average today, just below the 9. Here, there's a trend line here, potential support, and of course, you have that 200-day moving average. Again, if this is just a fourth wave bounce, maybe we come down again in a wave 5 to test that 200-day. The 200-day moving average is close. We didn't tag it on the Dow, we didn't tag it on the S&P, and a lot of times those are magnets. So if we were to come down again, that would be a target. Chart number 15, here's the S&P. This is the weekly chart, again down 2.75% for the week. Again, you can see on Monday it opened in that demand zone, weekly demand zone. It did bounce off of it. Notice rallied all the way to that moving average and pulled back from it. But it did initially bounce off the demand zone. Chart number 16, here's the daily KISS system. Again, as you know, this exited nicely. It's been in cash. And you can see my arrow here. That's the 200-day moving average right there in gold, yellowish color. We never tagged it. Wondering if possibly we come down again, that would be a logical target area. You can see the moving average ribbons bearishly stacked. Chart number 17, here's the 4 time frames with these indicators. First off, that DeMark 913 combo several weeks ago in mid-July, that called that top pretty damn well. We've been below the ATR on all these time frames, acting as resistance on rallies. You could see there on the half day from last week. And even today on that rally, stalling right around the ATR. Again, like I said, we're either going to go to another low here, guys, in a wave 5, or it's possible they could still recover it, but it needs to do right from here. Moving average ribbon is very wide now. You see this? So that's why that's still an option. Again, we'll see what transpires tomorrow. Like I said, futures were down after hours. They've bounced back a little bit. But again, things can change drastically overnight, just like they did last night when the Bank of Japan came out a little more dovish, and that is what spiked the market in the morning. Next, chart number 18, here's the daily S&P 500. Again, you can see, we bounced off that larger demand zone on Monday, as expected. But, so far, we just had a mean reversion bounce. Today, we pulled back right from those highs. Chart number 19, here's another daily chart showing that channel, which we obviously broke last week and on Monday. And you can see today, where did price stall? Right at that declining 9 EMA. Chart number 20, here's the leading diagonal scenario that we've been showing, but it would lead to that beeper pullback, WXY, which could be unfolding here. Again, under this scenario, once this is complete, whether it comes down to the 200-day moving average here or not, it should go up again to a new high in a wave 5, if this is the pattern, if it's not something more bearish. Chart number 21, here's a half-day chart, clean chart without a bunch of indicators showing you these gaps. And you can see, today we filled that gap, and that was where the market stopped and then sold off of. Okay, there is also an open gap below at 50.73 that could be potentially a target. Again, it's possible that we already completed the WXY and this is just a deep retracement and will form a higher low and go back. But the onus is on the bulls, guys. Chart number 22, here's the half-day chart, just showing this wave count, wave 1, 2, 3, with possibly the wave 4 in, and we go down in a 5, or if we can recover right from here. Chart number 23, there's the 2-hour review I showed on the weekend on a Monday with that potential wave 4. You can see we sold off right from that supply zone. That was an area to take profits. Chart number 24, here's a 120-minute chart. Notice how useful these moving averages are when they pinch like this. Those were the highs on those lower high bounces. You can see then retrace here. We filled that gap. Again, you need to take profits in the morning. Whenever you're in a strong trend, guys, strong downtrend, take profits on those supply zones. Anyway, you can see how price retraced about 61.8%. So quite deep, but it's possible it could try to recover here. We'll see. Honestly, I'd prefer that it go down and test the lows or make another low, because then we would set up that MACD divergence, which we did not have at Monday's lows on most of these time frames. Chart number 25, here's a 30-minute chart. Steve showed this little diagonal pattern last night, and you can see it played out. The sell-off, pretty deep. These diagonals tend to have deep retracements. That's why I'm leaving open the option that this could still recover. Chart number 26, here's a 15-minute chart. Again, you can see that ABC 3 wave up, right? There's an open gap right here, guys, and it's possible we could maybe fill that in the morning and then just boom and recover. But we'll see. There's a little open gap there. Getting much below there, then I'd favor a retest of the lows. There is a little RSI 5 divergence just to be aware of. Next. Chart number 27, here's the NASDAQ. First off, the KISS system, as you know, excellent exit weeks ago. This one's been far weaker than the S&P. Remember, this actually went below its 200-day moving average on Monday before recovering. Unlike the S&P, now it's coming down here again. That's why I'm wondering if the S&P also needs to test its 200-day moving average. Image number 28, here's the 4 time frames, daily, half day, 130 minute, 78 minute. Very similar look to the S&P. Below all these ATR resistance areas. Chart number 29, here's the NASDAQ standard chart. This is the triple Qs going back to late 2022. Remember, I've been showing this chart. Remember, we had that bearish symmetry break the previous week. That led to a lower high bounce, which is typical on a symmetry break. We stalled right at that resistance, sold off again. You know, we've been holding this long uptrend line going back to the January 2023 low. So that's an important area, as well as that 200-day moving average. Pulling back today right from that declining 9 EMA. Chart number 23, here's a zoomed in daily view of the Qs. You know, first off, again, we got right into that supply zone today in the morning. That was an area to take some profits, guys. Those supply and demand zones. We did fill that gap back here. Now we'll see, you know, is this going to go and make a new low, or can it form a higher low here? Is a slight divergence here at the moment. Chart number 31, here's a weekly chart. Again, remember I talked about the weekly doji short trigger the previous week, or a few weeks back. That obviously has played out very well. It was a very valid trigger right below the low of that doji, around 490, with a stop right at the highs. Those are very objective triggers, guys. Anyway, so far this week we've bounced off that 50-week moving average, obviously off the highs. Chart number 32, here's the triple Qs with the Japanese yen. Remember the carry trade, which has been unwinding here. You can see the inverse correlation between the yen and the NASDAQ. That's been playing out. Again, that's where, you know, big traders, institutions borrow money at cheap rates in Japan and then invest it over here. A lot of it goes into big cap tech. So while that Japanese yen rallied, that kind of caused a little bit unwind of the carry trade. Chart number 33, here's a 2-hour view. Again, you can see we rallied right up from Monday's lows off that support into that supply zone. It was a good area to take some profits. So we dumped today. Now we'll see if we can form a higher low, or we got to go to a new low. You can see how useful these moving average ribbons are, guys. See the cross, bearish cross, each little pinch squeeze were good short opportunities. Okay. The moving averages I use typically, guys, are the 9, 20, 34, and 50 EMAs. You got to use EMAs, not SMAs. Chart number 34, here's a 60-minute chart. First off, you can see the downtrend line I've showed from the highs. Way off from that, obviously. Nice little pullback today. Chart number 35, here is a 30-minute chart. You can see that little diagonal Steve talked about yesterday, sold off. We're now back into this demand zone. So for the bulls, they kind of need to hold this area. We'll see if they can bounce it tomorrow or if we lose it. All right. Moving on, chart number 36. Here's the Russell, which has had a big reversal. Remember, it broke out of this coil, got into the supply zone, and then boom, if you didn't sell that supply, it's always a good area to sell supply or buy demand. You know, you get it all back. It's back down to the 200-week moving average. Chart number 37, here's the daily. So again, you had a beautiful coil breakout back in early July, had a nice move, made a divergent high. See that? If you didn't take profits, boom, it gave it all back into that demand zone. It bounced off Monday's lows, stalling right at that 50-day moving average and today's ugly down candle. Chart number 38, here's IWM on the 2-hour view. You can see the rally up. It was outside the Bollinger Bands on Monday, very oversold there. Rallied up, but you could see it stalling in that supply zone before pulling right back. And chart number 39, the final one, IWM 30-minute chart. Again, you can see that little ending diagonal, the diagonal on this 30-minute chart Steve showed last night in our newsletter. Moving average ribbon was bearishly pinching, and it sold off from there. But again, we still could potentially form a higher low. All right, guys, that does it for the indexes. Let's go ahead and move on to some of these indicators. So here's the VIX. As you know, on Monday, the VIX hit 66. Hadn't been there in forever. Anyway, it got outside the upper Bollinger Bands 3 times on this move. Not surprising. Remember, the VIX had that nice base that it had built. You can see my comments from July 24th when I talked about that. So that has played out now. We've had 3 moves out of the Bollinger Bands. Okay, so this yesterday's close technically produced a VIX Bollinger Band buy signal. So should have added the arrow in there. And obviously, if you took profits this morning, you had a good trade. But this was a valid trigger. Chart 41, here's the 30-minute chart Steve showed. We did bounce initially off the demand zone and then, went a little below it and then came back up. Some of these charts I've covered on the weekend, the VIX VIVX ratio. Remember, this got quite, way up here where typically you start getting trade lows, and that did play out for Monday at least. Again, this had a heck of a spike over these recent highs. You can see the recent spikes on this ratio have been very good buy signals for the last, year and a half. But this last one obviously blew those out of the water since it was such an extreme move. So when you zoom out a little bit, you can see how, not logically back in the COVID crash, that ratio got a lot higher. But still relative, this got quite high. Okay. Generally, it's been a pretty good bottoming indicator when it has these spikes. Next, chart 44, here's the CPC put-call ratio. Now, in stock charts, this thing doesn't update until very late. I'm just showing this view because this was outside its upper Bollinger Bands yesterday. So not surprised that this morning we had a nice gap up in the market. Chart 45, here's the NAMO, McClellan-Osser, and NIMO. Remember on Monday I showed how these were below the lower Bollinger Bands. Well, they did produce a trade at least, and came back. Now, should the market sell off again, it's possible these could go back below the Bollinger Bands again. Moving on to the bond market, chart 46, high yield corporate. On Monday, it opened right on that trend line before bouncing up. Little black candles today. Chart 47, here's TLT 20-year bonds. Remember, the previous week broke out of this beautiful coil pattern, pulled back today with that move up in, with the pullback in the rates the last couple days. Chart 48, here's TMF. Remember, that was the trade I put out a couple weeks ago. It was a great trade out of that coil. Hopefully you took profits on Monday. That was a very emotional day. That's where I took profits. It was a great trade. It was up about 13%. It's now pulled all the way back to its 90 EMA. I took a little stab here just because, it's pulled back to the 90 EMA and it's been on lighter volume. We'll see. Chart 49, here's the 10-year weekly chart. Again, remember it broke from that coil, but you can see it bounced so far this week off that 200-week moving average. It's always an important area. Chart 50, here's the daily. Again, it just went last week, especially into Monday, just went just like a waterfall, very far below its 90 EMA. It's bounced back near its 90 EMA, as you can see. Moving average ribbon's quite wide here. This probably needs to be worked off. You can see the RSI got oversold there, so logically it's bounced back here, mean reversion. Right around to its 90 EMA. That's a typical mean reversion bounce, guys. You get too stretched away from the 90 EMA, you get pulled back to it. Kind of like stretching a rubber band that snaps back. Chart 51, there's the weekly. Obviously, remember that scenario I added months ago? Looking for a pullback in the 10-year, and that's played out. But I am looking for a higher low. Here's the zoomed out 40-year chart. Shows you the same thing. I am looking for this to eventually bottom, though, and rally back up again. The yield curve, which are not shown here tonight, that moved back to 0.98. We got to keep an eye on that. That's a great recessionary thing. Moving on to a few of these sectors. Here's XLK Technology. Like I said, it bounced nicely off Monday's lows, but notice, stalled right at the 90 EMA. Okay, that's your first big sticking point. Chart 54. Oh, the one above the previous one was XLK. This is SMH. So same deal. Bounced up, stalled at the 90 EMA. You see, guys? That's always that important area in the short term. Here's the bank area. That's also had a good pullback. So far, it's bounced off this support area for now, but obviously reversed today. Chart 56, here's KRE banks. Remember, we were looking for a short on these, and it gave you a nice short if you took this over a week ago. Hopefully, you took some profits down near that trend line retest. Chart 57, IYT transports. Again, great example of supply and demand. Stalled last time at that supply zone that we had drawn ahead of time, not after the fact. Lost that trend line support, then bounced off the demand zone that we had drawn ahead of time. But so far the rally's stalled at this 9 EMA. Chart 58, here's utilities. They've bounced back a little bit. Remember, they broke out the previous week. They had a pullback on Monday with the market when it over rallied, but they're still hanging in here. The chart is pretty strong. Chart 59, XLV Healthcare also continues to sell off. Been showing this one's nearing that lower channel. We'll see if it holds that or not, or breaks it for a short. Chart 60, XLE Energy. This has bounced back a little bit as well, right off that demand zone, but black candle off the highs today, stalling near that 9 EMA. Chart 61, there's the bullish percent energy index. I am watching this energy sector, guys, just because this is now in the oversold territory at 22.7%. You know, earlier this summer it was back up here in the 80s where it was overbought. Chart 62, here's FXI. That's the Chinese market. Got into this little demand zone, bounced so far a little bit. And let's follow up with commodities here. DBC, you know, remember on Monday it tested that big support, double bottom from the December lows. Bouncing back, but still below that 9 EMA. You had some RSI divergence there to suggest a bounce and wide moving average ribbon that needs to be worked off. Chart 64, there's the weekly. Again, it undercut that coil, but still above that 200-week moving average. Chart 65, here's crude oil. A little Pinocchio move below that coil before rebounding some today. Closed right at the 9 EMA. There is a little RSI divergence here that I did not draw mark on the RSI, but you can see it there. A little higher low on RSI, that lower low at the lows. Chart 66, UNG, natural gas. Nice bounce. I've been talking about this little wedge pattern. Natural gas is notoriously difficult to trade. One of its nicknames is the Widowmaker because it's so hard to trade. We gave a great trade back in April from that wedge up to the 200-day moving average where, you know, hopefully you took your profits. But it's been wedging here. You notice the MACD divergence. I thought this looked set up last couple days, and now it's out of this wedge. So hopefully some of you bought that in the wedge. Now it's got to clear that 20-day right there. Chart 67, Boyle, that's the 2-time leveraged ETF. That's the one I personally own. It's up 8% today. Chart 66, here's the 2-hour review. You can see that wedge a little better. Again, wedge had everything here. Nice divergence, MACD divergence, 5 waves. I like to see it hold up here, and I like to see the moving average ribbon cross back up. Chart 69, copper. Again, heck of a correction so far from the May highs there. Moving average ribbon is very wide. So far we have 3 waves, A, B, which stalled at resistance, C. We do have some RSI divergence here. You have this trend line. So to me, this is an interesting area to watch to see if it finds support. It is below its 200-day moving average, but you got a trend line right there. Chart 70, here's DBA, agriculture. So far this has bounced nicely off that 200-day moving average. By the way, the KISS system, the high performance went long DBA. Not showing that tonight. Here's the weekly. Again, 3-wave pullback, bouncing off that 50-week moving average. Chart 72, wheat. Remember, I've also thought this one looked like a lower risk long just based off that test to long-term support. It's bounced a little bit the last couple weeks. It's come a long way down from the 2022 highs. Chart 73, here's wheat on the daily. You had this steep wedge, and so far it has given you a trade. Okay, not a big trade, doesn't move much, but it's giving you a trade. You had that MACD divergence. For the bulls here, now you got to decide if you want to take profits or keep it. On the bullish side, you want to break symmetry. So you want a bounce here that's larger than this last bounce. That would set up likely a higher low or inverse head and shoulder pattern. That hasn't happened yet. Chart 74, corn. Been watching this one. I do think this is an interesting one because of this divergence. But, you know, you could be long with a stop right at the lows there. But obviously it needs to clear these moving averages here. Chart 75, uranium. Remember that head and shoulder pattern I talked about on the weekend, that's played out. It has bounced so far this week near that long uptrend line going back to 2020 and that 200-week moving average. Moving on to Bitcoin. Here's Bitcoin. Again, this is the weekly chart. Now, it did bounce off this support area that I marked. You can see that's been a previous important resistance area and support. The bigger demand zone's down here. Chart 77, here's the daily. So you can see that last move had 5 waves up. And then every time you get 5 waves up, always pay attention. You get, boom, big down move. Chart 78, here's the 2-hour view. So you can see it got quite oversold, rallied, but stalled right at that fib before pulling back. Chart 79, US dollar. Dollar did bounce off the demand zone this week, okay, but still below its 9 EMA there. The Japanese yen, which had a nice rally the last month that I've been long with. Hopefully took some profits on Monday. It's pulled back here. But this broken trend line will now potentially act as support. Chart 81, there's the monthly chart showing that potential wedge-like pattern that I've liked. Next, chart 82, here's gold. Again, gold pretty flat today. Still hanging up around here. This is a big support down here. Still holding up for now. The stocks, though, are underperforming, which concerns me. But, given all that's going on in the world, gold holds up very well. Chart 83, here's the tradable ETF, GLD. It's still holding that demand zone for now. Chart 84, gold on the weekly. Again, should it top or have topped up there, I would view that more as a wave 3 of 5, not the end of this bull market. Then I'd look for a deeper wave 4 correction, which honestly I would welcome. But still too early to say if that ended that move yet or not. Chart 85, here's silver. Continues to work lower. ABC getting close now to that 200-day moving average. That could be a good area to take a shot at on the long side if you're a gold bug. Chart 86, there's the monthly view. Again, after breaking out of that coil earlier this year, nice rally up. Didn't quite make it to that main supply zone. Pulling back here. I do think it's ultimately going to form a higher low and then rally again. Chart 87, GDX. Again, my problem with gold or my concern is the stocks are underperforming. Look at the ratio here. That's the GDX-GLD ratio, just continues to trend lower. GDX has been weaker. That may eventually pull gold down. Chart 88, there's the weekly version of GDX. Again, you had 5 waves up, and whenever you have 5 waves up, you usually get some reaction, pullback, and that's what we've gotten. You can see the stocks underperforming. Chart 89, BPGDM. Remember, this got to that nosebleed territory the previous week, up at 92% with that MACD divergence, then gave a sell signal, and that has obviously played out. This BPGDM Renko chart, guys, is an excellent mechanical system for trading GDX, the miners. Like I said, I didn't add any trade ideas here tonight, guys, but KVUE, that's been on the list. If anyone was lucky enough to be long this, it obviously had a huge gap there on earnings. I wasn't personally long it, so just showing that. Anyway, guys, we'll see what happens tomorrow. Quick check on futures. ES futures are down about 14 points. They've recovered off the lows from initially after hours. So we'll see, guys. Either we form a higher low here after the deep retracement, or we go to a new low. It's kind of either or. We'll see what happens tomorrow. Hang on to your butts. Have a great evening. Take care.